On this board, we're talking about income tax. It's very important that you have at least a basic understanding of income tax. Let's jump right in. First, what is an income tax? Well, an income tax is a tax that individuals and businesses have to pay based on the money that they have earned. Now, in addition to the federal income tax system, most states have a tax system similar to the federal system, right? There's only a few states that don't have any state income tax. And then there's some states that have a flat state income tax, right? But most states have the similar structure as the federal tax system, right? I'm in Maryland, and here in Maryland, the state of Maryland has a income tax structure that is similar to the federal income tax structure. So now, what is the basic formula for federal income tax? All right, really, really basic. We're not going to go into a lot of details in this video. Let's just keep it really, really basic. The basic formula for federal income tax is this: your income minus your exclusions, right? And your exclusions would be like income items that the tax code allows you to exclude from the calculation of your gross income, right? So it's your income minus your exclusions equal gross income minus deductions. And what are deductions? Deductions are items that you're able to deduct. So basically items that the tax code allows you to deduct when calculating your taxable income, right? So again, we got income minus exclusions equals gross income, minus deductions equals taxable income. And then from that taxable income amount, we apply the tax rates. And in a minute, I'm going to share with you, how that's calculated, right? Because the tax rates are based on the tax brackets, right? And the tax brackets are based on your filing status and your amount of taxable income, right? And so you apply the tax rates, and then you get your tax, right? And then you subtract off any tax credits that you may qualify for. And then also you subtract off your prepayments, right? Because like if you're an employee, then most likely your employer has been taking out taxes from your paycheck, right? Called withholdings, right? And or if you are self-employed, then you perhaps have been paying estimated taxes, right? So you've been prepaying. So either you're an employee who has been prepaying through your withholdings, or you're self-employed and have been prepaying through estimated taxes, right? So you subtract off your prepayments, right? And basically the tax amounts that you have already paid, right? So subtract off your prepayments. And if you get a positive number, that means that that's the tax that you still owe, right? If you get a negative number, that means that is your tax refund. So if you get a negative number, that means that the IRS owes you money, right? And so, okay, so yeah, so this is the basic formula for federal income tax. Now, federal income tax goes to the federal government, right? And state income tax goes to the state, right? And as I mentioned before, there's only a few states that don't have any state income tax, right? Now, the federal income tax system and most state systems is a progressive tax system, and it is based on tax brackets, which are based on your filing status, right? Now, there are 5 filing statuses. There's single, head of household, married filing jointly, married filing separately, and qualifying widow, or in other words, qualifying widower, right? Now, let's go through an example, all right? For this video, we're going to focus on a person who is filing as single, okay? A single filing status, right? Single. For 2022, right, for the tax year 2022, these are the tax brackets for a person who is filing as a single, right? Single filing status. All right. So you have these tax brackets, all right, and the federal tax rate. To really explain this, let's just go through an example, okay? All right, so in this example, let's say we are calculating the federal income taxes on taxable income of $50,000 based on the single filing status, okay? Now, $50,000, when you look at the tax brackets, you say that, okay, $50,000, it's in the 22% tax bracket. However, remember, this is a progressive tax system, right? So it's not that you take the whole 22% and apply it to the whole $50,000. No, 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 it doesn't work that way, right? It's progressive. And so $50,000, all right, if we go through the calculation, $50,000 taxable income, the first 10,275 falls into this first tax bracket. And so therefore, the rate that applies to it is only 10%. So the first 10,275, it gets applied to 10%, right? So here we have here in our calculation, our first line is 10,275 times 10% equals $1,027.50, right? But now, what's left over, right? Well, it also hits this tax bracket, right? And so the whole 31,500, because this tax bracket, this 12% tax bracket, is a total of 31,500. Because if you take 41,775 minus 10,275, you get 31,500. So 31,500 of the 50,000 falls into this tax bracket, and so 12% is going to be applied to that. So that's why we have here 31,500 times 12%, and we get 3,780. Okay. So now after that, what's left over is 8,225, right? And so all of that 8,225 is in this tax bracket, right? This 22% tax bracket. And so therefore, we're going to apply 22% to the 8,225, and we get 1,809.50, right? 50 cents. So basically, to recap, all right, here's what's happening. So in other words, what I'm saying is this: $50,000 of taxable income, but 10,275 of that 50,000 is in this tax bracket. And so we only apply 10% to that, and we get the $1,027.50. And only 31,500 of the 50,000 falls into this tax bracket. And so we apply 12% to that, and we get 3,780, right? And only $8,225 of the 50,000 falls into this tax bracket. And so we apply 22% to that, and we get 1,809.50 cents, right? And so we add up these three numbers, and we get a total of $6,617. All right. So this is our federal income tax. Now, here's the thing. If we take this $6,617 and divide it by 50,000, you'll see that it's around 13%. What is this percent called? This 13% is called the effective tax rate. The effective tax rate, right? Which is, it's much lower than the 22% tax bracket, right? Because as you saw, a portion of the 50,000 was applied to 10%, another portion was applied to 12%, and only the remaining portion was applied to 22%, right? So that's why the effective tax rate is around 13%. All right. Now, side note, this is only federal income tax, right? In many states, right? As I mentioned, in many states, you have to also pay state income tax, right? Which is an additional, tax, right? Now, another side note is this: independent contractors, right? People who are not employees, independent contractors, freelance workers, right? Independent contractors have to pay income tax plus a self-employment tax, all right? Now, what is the process in which income taxes are paid? What's the process? Well, it is your responsibility to pay your taxes every year, okay? Now, if you are an employee, taxes are withheld from your paychecks, right? And those taxes include income tax, social security tax, and Medicare tax, right? Right? Now, but if you are an independent contractor, taxes are not withheld from your paychecks, right? And depending on how much taxable income you are making as an independent contractor, you might be required to pay estimated taxes, which are quarterly payments of taxes. All right. Now, let's wrap up with some tax terminology. All right. What is a W-4? W-4. A W-4 form is the form that employers have their employees fill out during their onboarding process, because the W-4 form, it's the form that informs the employers regarding how much withholdings they need to take from the paychecks of their employees. All right. So basically, in other words, it's the form that informs the employers regarding how much taxes they need to withhold from their employees' paychecks. All right. All right. And so it's the employees withholding allowance certificate. All right. A W-4. W-4. All right. W-2. What is a W-2? A W-2 is the tax form that employers send to their employees after the end of the year, right? So in January, they'll send it out because after the year ends, right, then they have 1 month to send to all their employees a W-2. A W-2 is basically a summary of wages and withholdings, right? So they're giving their employees this W-2 every year, right, in January. And on the W-2, it has a summary of their wages, right? And the withholdings, the taxes that have been withheld during that previous year, right? That's a W-2. Now, what is a W-9? Well, a W-9 relates to businesses that are paying independent contractors, right? So paying workers that are not their employees, right? Because if they were employees, they would have their employees fill out a W-4, right? Yeah, a W-4, right? Which tells them how much taxes to withhold. But if a business has workers that are not employees, meaning they are independent contractors, then the employers are not withholding taxes, right? So they are not going to be giving them a W-4 form to fill out. They're going to be asking them to fill out a W-9. A W-9 is a gathering of info of non-employee payees, right? Because on this W-9 form, it gives the information, right, that the employers are going to send to their independent contractors at the end of the year through a 1099, right? Which just kind of, and that follows right into what is a 1099? A 1099 is a summary of payments to a non-employee, right? To like an independent contractor, right? It's a summary of payments. And so the 1099 is what the business will send out to all of their independent contractors in January, right? After the year ends, right? In January. It will send it out, and basically it's just a form that shows the total amount of money that business paid that independent contractor, because that independent contractor has to pay taxes on that money, right? On that's reported on the 1099, right? And of course, independent contractors, often receive several 1099s, right, from every company that they've done significant work for, right? The threshold is $600, right? So basically, if you have a business and you pay an independent contractor at least $600, well, at the end of the year, right? After the year ends, right, on December 31st, you have like a month, right? So you have January to send them a 1099, right? And the information, right, like in terms of like their address and everything, you get from the W-9, which you should have gotten them to fill out once they started working for you, right? W-9 in the beginning, right? So these are very key forms. Now, let's end with this. What is a Form 1040? 1040. Well, a Form 1040 is the standard IRS form that individual taxpayers use for filing their annual income tax returns. The form contains sections that require taxpayers to disclose their taxable income for the year to determine whether additional taxes are owed or whether the filer will receive a tax refund. Thank you for watching, and I'll see you next time on the next video.